Hi, it is 8th of August on the Monday, first trading day of the week itself, and the time now is 1:24 p.m. in Singapore. My name is Dylan. Welcome to my on-the-spot trading analysis video. Alright, so a quick recap for last Friday is that non-farm employment data is extremely well at 255,000, and more importantly, do take note that the wages growth has picked up as well to 0.3%. That is in fact very crucial towards whether the Federal Reserve will be able to raise rate, because one of the main thing is that there's a slowdown in the economic recovery of the US, and pretty much that's also caused by slow wages growth, so people are not able to spend that well. Household spending has been curbed, so wages growth is extremely important, but of course the employment change data is still the most important one, and we always need to have a much better figure to at least we can more or less assume that the Federal Reserve is more likely to raise interest rate. Alright, so in any case, that has already shown that the dollar has resumed its appreciation after much depreciation from the FOMC statement and a weak and underperformed advanced GDP. Alright, so it has turned around. So right now, coming to this week, my understanding of the market sentiment is that usually the dollar strengthening from the last Friday will continues to happen coming this week. The impact is usually brought over to the next week, so expecting the dollar to continue to appreciate further, and throughout the whole week itself we do not have much US data coming in, as in those high impact one, all the way until Friday itself. We have retail sales and core retail sales. Alright, so against most of the US dollar currency pair, I'll definitely be looking for sell unless there's any special change, and of course what I want to look for is a currency that is weakening, most likely to weaken this week, and against the US dollar, which is strengthening. That would be of course the best pair to trade with. But anyway, since right now I'm already at Aussie against the US dollar, let's talk about this. Now the Aussie against US dollar has been appreciating pretty much as the Reserve Bank of Australia is refraining from any further rate cuts unless inflation is really being affected by the strengthening Aussie. And of course, if the Australian dollar continues to appreciate from here, which is pretty possible, but we're probably going to see a little bit of major retracement throughout this week, because the dollar strength is I do believe it will be more overwhelming than the strength of the Australian dollar. Alright, so good news for them. In the 4-hourly chart, we can see that it's already resisted at a major resistance 76.59, or you can put it 76.60, beginning to fall. So I will consider this as the first wave of depreciation, which is caused by the NFP. And right now it's moving in a sideways consolidation, so looking for the right time to go for the sell, and easily I can identify it as 0.7623, and if you want to go for a sell, setting a stop loss, I would suggest to place it, let's see, in fact the best way is to place it back to the major resistance. Alright, and we can always expect this is the first wave of the depreciation. After since we're on the downward consolidation movement, we can always expect that the price may continues another wave right here, so potentially about 60 over pips, and I do believe it will still go down further as long as the dollar is still continuing to strengthen. Right, so yep, that's for the Aussie against US dollar. So you may want to look for a sell where the price is at 76.23, 24, about that. Okay, and of course, I really want to talk about the New Zealand dollar against the US dollar, because this week the main focus is on Thursday morning 5 a.m. Singapore time official cash rate and Reserve Bank of New Zealand rate statement. High possibility that they will cut interest rate, since we have seen the currency is still pretty much at a high. But if on my personal take, whether they will cut interest rate or not, I still don't really have a very strong sense of it, unless yesterday is last Friday the NFP data is not as good and the dollar weakens further. Then the probability of a rate cut will be much higher. But since the dollar has strengthened and the Kiwi has fell fairly a little bit, somewhere to the middle of this whole major, I call it the range, alright, range of sideways consolidation. So there's more to be seen. So we will be I will be observing for quite some time to decide whether they really is going to cut interest rate or not. But since that's the sentiment, there's the sentiment of a rate cut for the Kiwi, definitely there will be chances that the Kiwi will weaken, and in any case against the US dollar, which is strengthening, so expecting the price to fall further. So we have seen that it has plunged down, alright, and came down a little bit further. Right now it's making retracement. We cannot really see much structure right here, so going to 15-minute charts. Alright, yes, retrace, this first retracement, first wave of retracement, and followed by the second wave. I will be seeing the price to be resisted somewhere right here. We have a level right here as well. Okay, there's about 26 from here up to 26. Right, so that was pretty much close to a previous support, then we turned to the resistance level. Pretty good price to go for a sell, in assumption that the price will continue to depreciate. So that's at the price of 71.36, and of course take profit levels. There's a few to look at it. We have quite a significant level right here, a support level here, and of course right down here and all the way back to one of the major supports. Maybe let me push it slightly up a little bit. I would probably prefer this level 69, 67. Alright, these are the few levels that we may want to take note of if you go for the sell and the price continues to depreciate. Alright, 70, 67, 70, 12, and 69, 67. And if they would cut interest rate, they will see a much further depreciation. And if you look at the whole structure that we have right here, well, it does suggest something, if you get what I mean. Alright, there's a lot to be made for this currency pair. Alright, so don't miss it. I just want to quickly touch on a few currency pairs that I haven't been talking much about them. For example, the pound against the Japanese yen, still pretty bullish on the Japanese yen. As for the pound, is most likely to weaken a little bit further since the Bank of England has just cut its benchmark rate. And for the euro, the sentiment for myself, the overall sentiment to me is always pretty much bearish, and whenever we have a strong dollar, we always see a weakening euro. That's just the pattern of it after so many months, many years of observation. So for the pound yen, definitely we'll be looking for a sell, and we can see that it's coming down very well. More of a downwards consolidation. Sometimes we have a little bit of bounce, but in any case, it's getting lower. The highs are getting lower. So looking for the sell opportunity all the way back to the 15-minute charts. In fact, right now is already a good time to go for the sell. Alright, that's just how I always measure the end of the retracement. Came back to this level, came down, got retested again. Alright, let's see. Alright, there isn't really much of a support resistance level, a support time resistance level right here. It's a little bit pretty high right here. Okay, even if any case, if it continues to retrace, then it could probably break higher. Got resisted at the support and resistance level, so you may want to look for the sell. I think this retest is telling us something. Alright, so if you're going to sell right now, then I would suggest that you set the stop loss at least 134.32, pretty much above the 134 support and resistance level. And there's for pound yen, and last but not least, euro against the Japanese yen. Same sentiment as the pound against the Japanese yen, but I'm more bearish on the pound. In fact, we still we still have not heard much from the euro recently. Most of the focus are on we have Australia, Japan, and the US. And finally, this week we are going to see some important euro data. The German prelim GDP. I think that's a pretty significant one, but that's going to be on the Friday. Alright, so pretty much just leave it that way. And since we want to look for the sell, looking at the same thing as the pound against the Japanese yen. Alright, if you look at the 15-minute chart, the retracement is pretty much done. Okay, right now is getting resisted at near the previous high. Back to the 1 hourly chart. Let's see what is this level. Alright, we do have some resistance level that can be seen right here. A little bit further, we'll be back to here, support and resistance level. Of course, this is how I always do it. Let's go to 15-minute chart again. Alright, so yeah, we can probably look at it somewhere right here. So if you want to go for the sell, would suggest that you place your stop loss at 114.18, somewhere right there, above the support term resistance level, a possibility for that. Well, so that's pretty much for the euro yen as well. So with that, I have come to the end of today's trade analysis session, and I will see you again tomorrow.